Thank you, David. I want to first comment on the last speaker, not comment, but emphasize one of the points that I just saw the last 15 minutes, as I always try to be early for these presentations so I don't kind of screw up Dave's order of events here. But he mentioned something I think is very important. If you never hear from me or see me again, I think I do a whole presentation called the one thing. One of the things that I noticed was his comment on position sizing. I think that's one of the, now that we have all these micros and minis that we can be trading, there is really no excuse not to vary the power of your trade. In other words, the number of contracts, say in a futures approach, and to adjust that, the number of contracts, position sizing, with respect to the condition of the market, like the past speaker was talking about, and of course the value of the trigger that's putting you into the market. Anyway, let's talk right now about prop trading. I want to do some math with you. I have a degree in math, but that doesn't make me an expert. But I do notice that that most traders that I coach have a certain talent in math. I'm going to keep it very simple because I want you to understand why I am so I'm so crazy about this whole idea of prop trading. In fact, I think 2-3 years from now, we won't be talking about demo trading. We'll be talking about evaluation trading. In other words, trading so that you're getting evaluated to be funded. Because in this prop trading, you're actually trading someone else's money, tens of thousands and hundreds of thousands of dollars, and in return, you're going to be getting 90% of the profit in many of these firms. I'm going to show you a breakdown of some of the firms. I'm going to give you some math, and I'm going to give you a couple of links as we go along because I'm squeezing this presentation into an exciting 30 minutes, Dave. I love the no fluff whole idea of 30 minutes. So I'm going to move on this, but I want you to follow me with a pen and paper so that you can, does anybody use that anymore? I still do. Or your notepad on the side. I just want you to write a few things down as I'm going to give you a couple of links. I'm going to give you an offer at the end. If you're interested in this, I want you to kind of take the next step and learn a little bit more about it. So prop trading primer, and I'm going to kind of emphasize the math, but I want you to ask yourself a couple of questions first. How much, and these are important to compare what you've been going through financially with some of the benefits or lack of benefits, as you may perceive them, in prop trading. How much money did it cost you to trade last year? In other words, if you started with a $5,000 account, did you blow that out a couple of times, and therefore that number is 10,000? Or did you make some money and gave it back, and you count that as cost money? How much have you lost last year in your trading capital? And I say that not with a friendly smile, but with a truthful smile, that I know that 90% of the people that are likely listening to this, maybe because you are on this, maybe it's 80%. I think it's maybe a little bit better figure, but 80% are struggling or losing. And so, therefore, I just really want you to get a grip on what you're losing. Okay, so how much money have you lost, and are you spending on your trading platform? Because in prop trading, that's free in most of the firms that I've analyzed. The data feed, what brings your data into the prop into your platform, are you paying for that? Now, that's also not an issue with prop trading, as you're paid for both. But I want you to kind of get a number in your mind as I go through the math numbers that are relevant to prop trading. Here is a study that I did for the prop trading firm, study of 7 top Apex, not Apex, that's the winner of my prop trading analysis. You can analyze it yourself. But these are 7 prop trading firms that I commissioned a young genius who I'm doing more and more. I'm giving more and more assignments to compare and contrast these firms. And because when you say, boy, you're going to make 90% or 100% of the profit, and and you're going to risk that, and there's no money, you're risking their money. How can that be? Is it true? Well, you know, until you get that first wire into your account, it's a direct deposit into your account. You're going to have that doubt because it doesn't seem possible. But the truth is that the more people like me brag about the potential of prop trading and why after 30, almost 40 years of being in this market, I've never seen anything so advantageous to the smaller account. And yet it's the larger account. It's those people who are trading 100, 200, 300,000 of their own money that are putting that in a bill or a bond and using somebody else's money. They realize the potential more than some of the smaller accounts. But I think anybody that's trading, especially a small account, should really be focusing on understanding more about prop trading. This is the first email address I'm going to give you. Maybe the last one. It comes to me. It's either going to come to me directly, like today, where a couple of my assistants are off, but the admin@thedisciplinedtrader.com. If you write me, I will send you this study so that you can actually read it. Okay, admin@thedisciplinedtrader.com. I'm going to leave it there for 30 seconds so that you can write that down. Make sure you spell disciplined correctly. The Disciplined Trader. It's your first step to being disciplined, I guess. Okay, if you'd like that study, email me and say, hey, Norman, send me this study on the prop trading firms. But let's take a look at the winner. Now, I'll show you some of the things I considered in this comparison. First of all, Apex is the biggest as far as I know, and you know, I've done a lot of search on this. They're averaging over $10 million in average monthly payouts to people like me and those that are making money in prop trading, with trading their money and getting the 90% of the profit that we get 100% of the first 25,000 we earn. So over $10 million average monthly payouts since January of 2023. So you can do the math yourself. The total payouts, $170 million they've paid out since 2022, and in the last 90 days they've paid out $71 million. And these figures represent some of the main criteria. I want to see a company that's been there for several years. There are a lot of them popping up because of the advantages to the prop trading firm, who's doing nothing but collecting fees for those struggling traders. And then those that are making money are bragging about it to attract the next 10 traders, of which 8 or 9 of them will just be paying them fees. So they don't mind giving us all of the profit, or 90% of it after the first 25,000 in each account that you have. For instance, right now I have 10 qualified accounts. They're 7 $50,000 accounts and $350,000 accounts. I've been trading between $700,000 and $800,000 of their money. Okay, and in each one of those accounts, each one of those 10 accounts, they're paying me 100% of the first 25,000. Okay, I don't want to confuse you with that math. Just know that and until you call your bank, like I did. When I got my first request, I said, send me $1,000. Next one, $2,000. And I called the bank each time and I said, hey, is this money real? It's real. Okay, it's gonna become real for you too. Okay, it's got a 4.8 out of 5 rating on Trustpilot, even though I'm not a big fan of the way Trustpilot rates certain the criteria, but whatever they're doing, it's got a high rating, the highest I've seen of any of the prop firms, and they're paying traders from 150 different countries. Okay, here is another link that I want you to write down: thedisciplinedtrader.com/Apex. Okay, thedisciplinedtrader.com/Apex. Okay, this is going to always lead you to Apex's page and give you their best pricing, either advertised or unadvertised. They always have sales. I'm going to show you what those numbers are, but I want you to write this down. This will always forward to their best offer, whether it's advertised or unadvertised. So I want to give you that. Here is the zooming in. You saw all the how hard it was to read on my general comparison, but this is a zooming in, actually partial of Apex's table, and I want to zoom in on the $50,000 qualifying, because that's really where I think you should start. Why? Because it's the easiest to pass. I'm going to show you why. And what I want you to do is get that money in your account. Once you want the money's wired into your account, then you can kind of accelerate your enthusiasm and really start to grow with this as a long-term consistent income, using their money and getting 90% of the profit. Okay, in this $50,000, you see that the monthly fee is $167. It's never that with them. They're always, since the beginning of the year, they've either discounted 70, 80, or 90% of this. Okay, right now they have their discount is 80%, meaning that it costs about $34 a month to qualify for funding of $50,000. And what does qualifying mean? It means you have to make $3,000 before you lose $2,500 from a particular high. And we'll get into that. There's a little wrinkle there that we can discuss if you decide to take advantage of my offer and so on. But I want you to understand that you've got to make $3,000 before you lose $2,500. For instance, if you start with $50,000, okay, in the qualifying phase, you start with $50,000 and you trade it to $51,000, okay, then your red line, this $2,500 depression that you don't want to hit, starts from 51,000, not from 50,000. So that 2,500 follows you as you're approaching $3,000 and then more. Once you close this account at 53,000 plus anything, or 53,000 or plus anything, equal or greater than 53,000, then you will be funded. You will actually be given $50,000 to trade and be given the same parameters of 2,500. It works a little bit differently in the it works even better really once you're qualified. But I just want to give you kind of the major numbers. Let's go through what it looks like if you were to try this at $50,000. Okay, the evaluation is not 167. The monthly is not 167, and generally it's going to take you, when you get good at this, it'll take you a couple of few days. Right now, they're offering normally they make you trade at least seven trading days in order to build that 3,000. Why? Because they don't want you making $3,000 in one trade and calling yourself a qualified trader. They want to see consistency in your growth. Okay, easy to do. So, but 167. So if it takes you 2 months, you'd have to pay 167 twice. That's not the case. They're always discounting 70, 80, or 90%. Right now, as I mentioned, 80%. So let's use that number. So let's use $34 a month. Okay, this is what, if it took you 2 months, you'd be paying $68. 3 months, close to $100. Okay, so these are not costs that are crazy. They're very, very reasonable. Okay, and you have what they call a reset fee. If you open this qualifying account and you pay your $34 and you bust out, you lose $2,500 and your balance is $47.5, below $47.5, you can reset that for $80. But right now the reset fee is half, so you can reset that account at for $40. And then all of a sudden you're back to $50,000 and you're trying again from the beginning. Okay, so when you're qualifying, you don't want to be aggressive. You want to. There are points to be aggressive, and I can teach you that. But the idea is that you want to be a successful, long-term, conservative type trader. That's what they're looking for. So let's say you went ahead and tried the 50. It took you 2 months and you had to reset it twice. Okay, so you paid $34 twice and you paid $40 twice to reset it. Those are the actual fees right now that they're charging. It would take you $144, and for that $144, you are now qualified. You will now be awarded $50,000 to trade. Okay, now there's another fee before you start trading. Once you're funded and they congratulate you and give you a certificate for the $50,000. You have a choice. They say to you, either you can now trade this for 90% of the profit, 100% of the first 25,000 you make, but you got to pay us $80 a month, and we'll give you. They use NinjaTrader. There are others that they'll accept, but they'll give you NinjaTrader and they'll give you the data feed, and that's all for $80 a month. Or if you pay them once, if you have confidence in your trading plan, then the choice would not be once you get funded to pay $80 a month. It would be what I do, and that's to just give them the $140, and I never have another fee trading their money again in that account. Okay, so those are your fees. Okay, those are what you're looking at. So to start to trade the $50,000 account, if it took you 2 months and 2 resets, which it likely won't really, but if it does, if you're very new at this, 144 plus the 140 lifetime, if you chose that, $244, and now you're trading somebody else's money for 90% of the profit. I just don't know, you know, when I've heard in the past, I hear less and less of it. Oh, I'm just going to keep paying the monthly. So what? So what? It's never 167. It's 34 or even 16 or 17 or 49. It's always something very rich. They are giving you $50,000 to trade and giving you 90% of the profit. Tremendous opportunity if you don't trip over the pennies. Okay, so this is what I wanted to show you as far as some of the math, and in the recording you can go over this again, but I want to show you a couple of other things. To make a withdrawal request, your account must be require the minimum balance to approve. Here's what I'm talking about. In that $50,000 account, once you're qualified, once you're trading it, once you get over 52,600, why they picked that number, I don't know. Let's say you end. You can end that week or that month at 52, or that week or that. They pay you twice a month. So on the 1st and the 15th, you can request money. Okay, so 52.6. Let's say you end that 2-week period there at 52.6, and you want to request money. You can request as little as $500 or as much as $2,000. Okay, so that's all this is saying to you. There's a couple of other minor rules. There's a maximum to what you can withdraw, meaning that in the first 3 months of your withdrawal, if you withdraw every month, even just $500 for 3 months in a row, then there is no limit on how much you can withdraw. So my approach to you, my suggestion to you, is that you conservatively build that $50,000 funded account to 60 or 70. This way you can take out as much needed. If you have a bad week or a bad month, you still got plenty of money to reward yourself with consistent income. You'll be trading multiples. I'm trading 10. There are others that are trading 20. There's a maximum of 20. That's for another discussion, but start with a 50 and start asking for 1,000, 2,000. It'll start to get real. Okay, the other thing, this is the other chart that I pulled off their page. You can see that there's a maximum drawdown of $2,000, maximum request for each pay period for $2,000. So each account is considered a separate standalone account. This is why people have $5 or $10, $50,000 accounts. And there's something called trade copier, where you can press one button and boom, you can put that same position in all of those accounts. I know I'm talking fast, but I want to get this out so that at least you try it. Okay, $50,000, $2,000. Each account is considered a separate standalone account, which means that if you have 10 accounts, you're going to draw the maximum on each account for each pay period, of which there's 2. So if you drew $2,000 off of 10 accounts, okay, and you do that twice, that'd be $40,000 for the month, and all you really did was make $4,000 in one $50,000 account and duplicated it 10 times. That math we can go through another time, but I want to show you the potential here of this $50,000 account. Okay, and the beauty of it. And if you look at some of these higher accounts, at least in the beginning, I like the fact that you can withdraw almost as much as in these other accounts. But don't get greedy, because once you withdraw, you're getting closer to that red line if you haven't extended it to 55 or 60 or 75,000 or whatever, or wherever it winds up going for you. Okay, that is really where I want to. Now I want to show you the road to consistent long-term income. Okay. There are three phases to this. I'm kind of rapid here. There's three phases. One is the $53,000 to be funded. You got to get over that $3,000 to be funded. So you start with 50. Okay, I'm referring to a $50,000 account. You start with 50. If once you reach 53,000, you're funded. If you go below 2,500 from your open equity high, you bust out. If you bust out, you can reset for 80. I've just shown you it's really 40 now. So passing $80 a month, or once you pass, you have the choice of paying $80 a month or $140 lifetime. That's the evaluation phase. You've passed it. Now you're funded. This is the funded phase. You must get over 52.6, which I show you, before you can start withdrawing. You can withdraw twice a month. If you bust out, if you get to 50,100, that would be 2,500 below that 52.6. If you go below that, then you're bust out. But it's nice to know that 2,500, that 50,100 number doesn't follow you as you build up. As you build to 60, 70,000, it doesn't follow you. So there's a lot of room to take out money and be a little bit more aggressive once you've expanded your distance from the red line. If you're busted out, you have to revert back to the evaluation stage. If you bust out the funded, the money is gone. You've got to test again. Okay, and you can withdraw anywhere from $500 to $2,000, and you can withdraw twice a month. Okay. Now, in what I call the consistent income phase, once you've withdrawn 3 consecutive months, even if it's $500, there's no limit to the amount you can withdraw. So if you can build it to even say 70,000 over a few months, okay, then you can take out 5,000, 3,000, and you're getting nowhere near the 50,100 red line that stays there. So this is the cool part. Once you start moving away from the red line, now you can almost operate like it's your own money, so to speak, and be a little bit bigger and higher opportunities and not quite as conservative, although I suggest that you continue to trade the way you got there, okay? The goal after no limit is to achieve and continue to build the account, keep the minimum withdrawals so that these $2,000 and $5,000 biweekly withdrawals can continue even during less successful periods. I think you understand what I'm saying. I've got about 7 minutes left. Let me show you what I'd like you to consider. Okay, this is not a big investment. It's not $1,000 investment. Not even let me show you this investment that I'd like you to make on yourself. Okay, and it's going to get you connected to me, which is going to give you email access to me. Okay, if you take this offer. Okay, the first piece of the long-term income with prop trading mini course that I'm offering you here is overview and clear advantages of prop trading. You'll understand how prop trading makes money, how they make money, what the prop trading rules are, and why it spells a huge opportunity. You've got to stay, as in trading in general, and especially when you're taking on a new approach like this, you've got to keep motivated. This may not sound like an important piece, but I will tell you it could be the most important piece to keep you motivated to continue to move forward in prop trading. It's what I showed you, the tens of millions and the hundreds of millions, 170 million, whatever that number was that they've paid out over the course of a year and a half. This is real. You can be part of this. Let me help you be part of this, okay? Overview and clear advantage. That's the first piece to keep you motivated. The second piece is the importance of the right kind of trigger to pass the evaluation stage and beyond. You'll discover that the best win ratio, you'll discover the best win ratio, and you'll solve a common trading discipline dilemma at the same time. One of the things that I teach is that you always take on 2 contracts. You trade one as a scalp, and I've never been a scalper until I started prop trading. You trade one as a scalp, and one is what I call a runner. The previous presenter kind of alluded to a little bit of this kind of a technique, but it's something professionals use to make sure they get something out of a trade, but also let themselves get much more out of the trade. You always want the chance to have a big trade. I want to show you how that's done. I want to show you the right kind of triggers to use, and that's the second piece. The third piece is how to handle the drawdown rules so you can trade with a relaxed confidence. If you lose a few times, you're going to get close to that $2,500 line. It's going to make you a little bit nervous. Don't be nervous, okay? I'm going to show you how to understand how to keep those drawdowns low, so you'll compress the time you'll need to pass the evaluation. Staying away from that red line is what you want to be. I'm going to show you how to manage your risk per trade and so on. Very, very important, this third piece. The fourth piece is how to run your prop trading as a business. I've given you a little bit of an insight on that, where when you have a funded account, just continue to stretch it, and you have several of them. I can show you how to trade them a little bit differently so that you can be a little bit more aggressive with some and others. But I want to show you how to run your prop trading as a business, whether you're trading for consistent retirement income or trading to diversify your portfolio, knowing which funding amounts to test for, when to and when not to reset your account, and the proper position sizing. It's going to spell the steady income for you. I chose 150 and 50s, and there are reasons why I test for those two exclusively, and I'll show you those reasons and some other alternatives that you may want to take advantage of. The fifth piece, let me show you. So here's the summary. I've got about 2 or 3 minutes here, 3 or 4 minutes. Overview is the first piece, so to keep you motivated and explain what the depth of the opportunity is. You got to know what they're into, and what we're doing on our side. We're helping each other. Okay, this is a symbiotic relationship. I'm going to show you the importance of the right kind of trigger to pass the evaluation with these. I'm going to show you how to handle the drawdown rules so that you can trade with relaxed confidence, and I'm going to show you how to run your prop trading as a business. And the last thing I'm going to do is I'm going to show you how the specific steps to get funded in 10 days. Now, I mentioned 10 days because that's how long it took me the first time to get funded for the $10,000 account, for the $50,000, the first $50,000 that I tried. And the first 150, it took me 22 days. I was probably a little bit too conservative, but since I'm the teacher, I didn't want to be the one blowing out accounts all the time, as I showed my example. So I did it in a very conservative way. It took me, right now, takes me 2 or 3 days in a very relaxed way, and I can show you how to do that with a $50,000 account. But the account with $150,000 in 22 days, I want to show you exactly what I did step by step. So this is the package that I want you to invest in. Invest in yourself so that you understand what you're getting yourself into, and once you get into it, this will also guide you on how to go through each stage. Okay. It is available right now on my site for $497, and it is a terrific value if you've followed along with me with the math. But I'm giving you for David and I we've been colleagues for a long time, and I wanted to do something special. So $497, I'm going to give you a 60% discount, $197. I want you to own this mini course and have access to me through email for any questions that you have. Okay, here is how to get this for $197. You've got to follow this specifically. You got to go to thedisciplinetrader.com/prop, and you got to use the coupon code May8. You'll see a place on this offer page. You'll see a bunch of testimonials, a lot of them. May8. Use that. And I'm limiting it to today. You can only take advantage of this today. May 8 will not be around because you have email access. I can't be having the flood of emails. So I've got to make a deadline, and I'm making that deadline today. Okay, either this is going to be for you or not, and you really won't know till you dig deep. So I'm offering you, and I really would like you to take advantage of this, because I have never seen anything like it in my 40 years. Here, to end this, let me just say that exactly what I needed after struggle. In fact, let me just go right back to this. You can read all those testimonials are on the offer page. David, thank you so much for the opportunity.